Here, everybody. It's Gil, and I'm here with Dr. K, and actually, we got Ross Haber with us today. So, if any of you have any deep, dark, personal questions you want to ask Ross Haber, feel free to IM in, but I can't guarantee that we'll answer them. But some of you may know that Ross is joining us to work on the Managed Accounts program and run that program for us. So he's here, just hanging out. I don't think I'll have too much to say, but you can ask questions. I think the general gist of the market here and our forecast, if we had to have a forecast, and that's not really what we're all about, we simply go by what the market's showing us in real time. But what seems logical, and given the fact that gold remains below the 200-day moving average despite a rally recently, that could be signaling some liquidity issues for the market. And it's kind of interesting the market's a little soft today considering that you had the ADP employment number come out and they stomped the estimate. And then you had continuing claims or jobless claims, whatever, were ahead by 15,000. The one thing you have to remember, though, is all the government data is, as our friend Fred Richards likes to say, nothing more than output coming from the Ministry of Truth. And it's all massage data. It's all a bunch of baloney. But nevertheless, the market does react to it, and it's interesting that even such a strong number doesn't really elicit a big rally in the market, especially after one big up day on Tuesday followed by a reasonably acceptable day yesterday. So you'll have to excuse me, my allergies are acting up just a little bit. We actually have some pretty warm weather here in LA. It was 82 degrees on New Year's Day, and it's been hovering in the 70s around here on the beach. So it's actually, the plants don't know what to do. They don't know, is it winter, or is it summer, or what the heck is it? I actually have a pepper plant that lies dormant through winter normally. All of a sudden last week started popping out peppers like mad. So a little bit confusing, but it gets my allergies going, so bear with me. You can see the chart of the NASDAQ here. Really what you got going on, if you had to be objective about the index, you can't say there's necessarily much going on that is wrong with the index's action. If you look at it, it gapped above the 50-day moving average on Tuesday morning. Markets took their cue from the European markets, most of which were open on Monday, other than the FTSE was closed for the day after New Year's. But you can see you pulled back yesterday and you held the 50-day moving average. You're doing the same thing today. So it's not like the index action is bad. You got this triangle pattern. It's broken out of the top. If you drew a line across the top of this, for those of you who like to draw lines, I know I do. It's always a nice diversion. You can see you gapped up through that declining tops trend line and you pull back to this line, and yes, so it's acting okay. I mean, you would say that's acceptable. Whether it's exciting is another issue, but you might come to the conclusion that that is okay from an index point of view. So obviously the model isn't on a buy or a sell right now. It's on a neutral signal. If you look at the NYSE-based S&P 500, you can see that's above the 200-day. So aside, in spite of the NASDAQ finding resistance at the 200-day, you have the S&P above its 200-day and trying to break out to higher highs here. It's a reverse head and shoulders. I don't really look at those. A lot of times a reverse head and shoulders is just a cup with handle a lot of times. So you can start labeling them whatever you want and go buy some stickers with different base labels and pattern labels. You can stick them all over the place if it makes you happy. But I think what you're looking at here is the indexes look okay. What's going on under the surface is a little the sanguine. I think you have some issues with some stocks, and then there are some stocks acting well. So the general gist has been that whatever's been acting constructive, more or less, has continued to do so, whereas things that have acted weakly or been wobbly, they come off, and you see that in some of the action, even on the big up days like Tuesday, where you saw some of our short sale targets pull off. So that's really what's going on. Now, Dr. Katie said something?
No, go right ahead.
Okay.
All good.
But now you made me lose my train of thought. Not that I really have it. It's only got a caboose and an engine. Anyways, I mean, the indexes look fine, but a lot of stuff is going on underneath the surface, and there are some stocks acting well. We've alerted you to some pocket pivots over the past few days, and some of those stocks are acting okay. Let's take a look at some of them. I guess I'll get rid of the S&P chart. Let's bring out my daily chart. You're looking at my main screen, so everything you see on here is what I'm watching right now. here's an interesting stock. Now, someone mentioned this one last week, and I've been watching it. And it is an interesting pattern. You got this double bottom here. You tried to break out and you failed. So it's a late stage base failure. Can't really say there's much wrong with this double bottom except, and let me see if I can pull out a weekly chart here, if I have one somewhere around here. I actually don't, so let me pull up a new chart here. And you look at the weekly chart, it's got this weekly interval here. If you look on a weekly chart, what you got down here, you go 1, 2, 3 weeks down on the left side of the double bottom. Now, I like to see, 4 or 5 weeks on the left side. Usually, if you just have 1 or 2, and you might even say that, well, probably 1, 2 weeks down, and then you bottom here. So this is a little bit quick. It doesn't really, it's wide and loose. You don't see any tight areas. It's coming after a long run. So I would call this a late stage failed base at this point. You got the 50-day or the 10-week right here is about to roll through the 40-week. So it's looking weak, and I've been watching this for a while. Dr. K pointed out yesterday as well, because it's starting to pick up some negative action, because you notice it's been hugging the 200-day and kind of drifting up along it. But I think I put an alert on it earlier today, and if it broke these lows, I'm coming after it on the short side, which I did, and it's actually working right now. So I'm actually short the stock right now. And it looks like it wants to go lower, but it may undercut this low here and then try and bounce from there, or it may just head for this low. But for now, this thing's breaking down under the 200-day moving average. It's an easy short if you use the 200-day as your stop, or you can use the high today as a stop, or the 20-day, whatever you think is reasonable. But I wouldn't expect it, if it's coming 1, 2, 3 times up into the 200-day moving average, I wouldn't expect it to do it again. So, but it could, So I think this should be it, and it should start to break. So I'm kind of watching this. If it starts to turn on me, I'll cover it. Now, speaking of stocks turning on you, someone mentioned CRM rallying. I think this is a logical spot. It's a little tough to really gauge this, because what you have going on here is it rolls up into this gap, and you can't always use the exact area of resistance. You have to be, as you're, as a point where you say, oh, I'm going to give up on the stock. You have to stay with it, because a lot of times they will go past, fake everybody out, and then turn. And Tuesday was a great shot to short this thing up around 106, 105. I was nailing this thing big time. I actually covered it pretty much flat on the day. It looked like I was going to start to make some money, but it's kind of bouncing around right here. I'm going to wait and see how it acts. It may be undercutting, because if this was a quick flip out down here, there may be actually a point somewhere a little higher that is the undercut. Maybe it's the low here. So this could work out a little bit differently. But my expectation is this thing remains weak. It's probably going lower, but I'm probably going to have to campaign it by coming after it a little later. But I did make a good pop on it, 7, 8, 9 points, 8, 9% on a position that was about 200% or more at the time. So that accounts for me being able to be up like 11% the first 2 days of the year, which is my best 2-day start to any year. Most of the time I'm not doing anything, but I don't think it really means anything. It does tell me, though, that by being short right off the bat, even in the face of a big rally on Tuesday, I was able to make pretty good money. That tells you something, and I think that at the very least it tells you the market's a little bit wobbly on the long side. Nevertheless, there are some things that act well, and I'll get to those in a second. But let's look at the other one we were tracking. Fossil, it undercuts. It comes down. One thing you have to keep in mind, if you're short a stock, in this one we started going after in here, and felt that any bounces off the 80 level would be shortable, and over the past few days those have been, and it's broken down through the 80 level. Now you're bouncing back in. Volume is not all that impressive. Well, actually, I take that back. It's 110% above average. So you've got some people in there, but there's a buy recommendation that came in overnight, so that might be pressing some money, because I think a lot of money managers might feel a little bit behind the 8-ball given the big rally in the indexes. But we can see that despite the big rally in the indexes to start off the year, Fossil's been down the first 3 days or 2 days of the year, and today's the third day. The market's down, or the Dow's down, Nasdaq's up now, and the stock is up. So maybe what I need, if I'm going to be short Fossils, I need the market to be up, because it seems like the stock goes down when the market's going up. But in any case, it's in a logical place to start to bounce. So, I've got some out here, but I'm using the 80 level roughly as a trailing stop. If it gets to there, I may stop out, but if it breaks down again, I'll come after it again. But I did make some money here, which is very helpful on the downside. So, those are really the two we've been going after. If you were shorting Baidu, okay, on Monday you got blown out right away if you're using the 118, 120 level as your stop, which I would. And now you're just kind of watching it. But it does show you, I think, and I think the key here is when you're in this sort of a rally like you are now, the index stocks, if you're short those will be the ones that tend to hold up and gap up. So you see Baidu acting well, you see Apple acting well, moving up with the market. Amazon, a little less so, but you see in general, it's trying to bounce here. And I think you have better luck shorting stocks that are non-index stocks, simply because I think money flows into this market. Money managers have to get in this market fast. They're going to go after the bigger index stocks. And if you're short them and they're in a weak pattern like Baidu, I think they push them a bit and squeeze you a little bit if you're trying to be short. But net, what is the stock up? If you're shorting it into the 118 area, it's up 4%, 5% against you. That's really not very much. I play these very tight, very, very big positions, and I'll cover them quickly and then come back after them. So, but I have, 2 great days. Shorting today, I'm down a bit, and we'll see how the day ends. It's still early, but I think the market is starting to look a little bit weak. So, and some other stocks I'm keeping an eye on. I'm looking at Lulu as a short on this rally above the 200. I think it skids a little bit past. Maybe it gets in here, and you have some congestion in here into the middle of this pattern. Goldman Sachs yesterday came out with a buy recommendation. I have to tell you, it warms my cockles when I hear Goldman Sachs recommending a stock and it gaps up or jams to the upside the way Fossil did, because I always remember May 2010 was the month I almost doubled my account on the short side. And I remember this day right here. You see United States Steel right here on the daily chart. I'll make it even bigger for you. But you can see on this day, May 13th, Goldman came out and put a buy recommendation on X, and the stock gapped up, and I just shorted this thing until the cows came home and actually went to bed and so forth. And this thing just blew to pieces, and it helped make a good May and not too bad of a June as well. But I love it when Goldman gets out there and starts recommending something that's been beaten down, because a lot of times what they're doing is they're just fronting for a client who has some stock to unload. So they come in there and put a buy recommendation on something to pump in. I think that's the same thing going on today with this cheesy little bank on Fossil. But it's also in a logical position to try and pin itself against what was prior support, and is now I see as upside resistance to the 80 area. So I've got a core position short in this. If it pushes, I'll get out and then look to reset if it pushes a little higher. In some cases, I may even come after it a little bit lower if I think the stock is breaking. I want you guys to keep one thing in mind when you're shorting, okay? What are you looking for? You're not looking for little 2 or 3 point blips. That's what I'm able to take out of the market over the past couple of days. Well, actually, CRM, 7, 8 points, take out of that. But you're not getting, what you're looking for is a big move to the downside. You want to be there when it happens. And you want to get off to a good start, by having a position. We did that with Green Mountain. Remember, we were shorting it right in here. And when that thing blew here, now you're in a great position to start working this. And you can watch it, cover a little bit, hold a core position, add to it where you think you should, maybe up into the moving average, the 20-day here, But you're really looking for this kind of move. So let's face it, you haven't had that yet with Fossil. It's still hanging up in this kind of, looks like a right shoulder land. If you call this left shoulder, big head, right shoulder. I kind of look at this as an improper double bottom. Here's one low and your second low, and the second low is higher than the first low. It tries to break out here through the peak of the middle of the double bottom, and it fails. And to me, this probably needs to go lower, but it's holding up for now. But it's been down, 4 or 5 days in a row, so it's logical for it to try to hold. So things aren't all going to break all at once. Don't expect them to. But the way the shorts act, for the most part, if you get a feel for them, you can come back and cover and short and work a position. That's how I do it. So I think, and those of you who have asked, my accounts are designated as basically active trading accounts. I mean, the brokers tell me I'm a pattern day trader. If you buy stock on the same day and unload it, you're a pattern day trader. That's fine with me. But for accounting purposes, that's how you avoid wash sales. Although I think the rule, I'm not sure how the rule works. All I know is my account says it doesn't apply to me. All right, let's go through some questions. Well, wait a minute. Let me talk about what I'm looking at on the long side that I like here. And yesterday we talked about INVN as a pocket pivot, stocks continuing higher. These guys are interesting. They make motion sensor chips, so their business is doing. Let's say you bought this morning, you bought the stock on the basis of yesterday's pocket pivot. How would you handle this position, given that it is a smaller stock, but it seems to trade pretty well, and B, just coming out of this little funky IPO type phase?
Well, we know it's an IPO, so it's going to be more volatile. Also, the size makes it more susceptible to volatility because it's not even a billion-dollar company, so it's at best, it's a small cap. And it's got a compelling story. So had I taken a position on this, say today at the open, you have to be willing to sit with some volatility, meaning that it might trace all the way back to its 10-day moving average, down around the low 10s. And so, buying today and selling down in the low 10s would mean, loss of close to 10%. So you should position size according to your risk tolerance levels, knowing that you might have to hold through some volatility like that.
Yes, that's why I only buy 100% position instead of my usual 300% position. So let's see. So that's one that's acting well. We noted that biotechs have acted well. Alexion, I was talking about that one when I was on Fox last week, and they always hate it when you talk about a stock making new highs, but they don't get it, and we know that already. But Alexion breaking out, and it's heading higher. They have the drug Salix, and I think the big key here is Salix is what I think they call an orphan drug. It only has one disease that it treats, a rare blood disorder, but just recently they got approved for a second disease that it can treat, and that was also approved on the same day by a European regulating authority, whoever does that. Like the FDA, and so now they've expanded, they've doubled the potential market for their drugs, so they've done pretty well. It is a late stage pattern, a little bit looser, but my thinking is if it holds 70, it's probably okay, 68 maybe at the most, but here's the 10-day running through here and it's held it, so there's a fundamental basis for this. And we like the biotechs, we like medical because they have a defensive aspect to them, in that demand for medical services, products, and drugs doesn't really taper off with the economy. So, there is that working for these. I think that's one of the reasons you've seen Intuitive Surgical do well, but also they're expanding into Japan. So, over time, you just have to ask yourself the question, more robots or fewer robots, and probably more robots and fewer surgeons. So that continues to act okay. There's no volume coming out, but and a lot of people ask about this, but this is why we like to use pocket pivots. Because a pocket pivot can give you the very coherent buy point. I think we had a pocket pivot way back somewhere in here. I forget where. Maybe it was, or we have a Bible gap up here. So you just buy that, and you're doing fine. I think you get some pocket pivots like right here. That was a good one here. So we'd be buying in here, using the 50-day as your guide on the downside for this stock. And it breaks out, but so what? You don't have to worry about it. And a lot of people, if it's a light volume breakup, they want to short it, but I wouldn't do that because it can just eventually find some volume. But it's acting okay. But I think it sets the tone for the most part for the medical group. And you're seeing a lot of other big stocks, Merck going higher. You're seeing Pfizer going higher. Well, not the last couple of days, but it has been, and it's pulling back. But look at that move off of the 18 lows. So, for that stock, that's kind of getting going there. I think I've even seen. I'm trying to think of the other drug stocks. Novartis, I think. Do I have that right? No. National. What's Novartis? NV? Nope. Whatever. You know what I'm talking about. But look at Biogen. Biogen is hopping and bopping along. We had a pocket pivot 3 days ago. We alerted you guys to that. My thinking here is you're right on top of this structure. Let's get this out of the way. But you're right on top of this base. and you're pulling back. You pulled back once and you held, and you got a pocket pivot type move here. You've had a couple of other pocket pivots. Here's one in here. It's very subtle, but it doesn't really hold. But here's another one, and that one holds above the 10-day and the 50-day. And then you get another one here. Now this thing's starting to come out of here. So you could actually have gone long this thing, and it's acting okay. And that's kind of the nature of the market. It's somewhat bifurcated in the sense that there are some stocks that continue to act well, while you see weaker stocks continue to get weak. So that's basically the story there. You know, another one to keep an eye on, I think,
You can do NVS. NVS is Novartis.
NVS, Novartis. Yeah, Novartis, not so well. I'm trying to think. There's another one I saw. I think it starts with an E or Elon, ELN. Has been hopping and bopping. Yeah, that one's moving higher. So I mean, you're seeing movement. I think it's partially defensive, but I think there's also, if you think about it, a lot of the medical stocks haven't been played for a long time. And you know, when I was on Fox, that guy, whatever his name, Chris Cotter, says, well, you know, it's up 70-80% or something off, you know, for the year. It's like, yeah, I know that, but it's actually coming off the low of this big fat base. It's about 18, 19 months long, and it's just starting to emerge from this pattern. So my thinking is, you think this is extended? Nah, it's come off the lows, built a base, long-term period of really not performing or doing anything, really. So underplayed, you know, versus, say, something like Apple versus something like Amazon. And so, you know, these are coming out. And in the meantime, you see some of these smaller stocks like the Alexion, Cubis, Biogen as one of the bigger ones, Viral Pharma, another one. You know, these guys are supposed to have some big earnings coming in next year. Things holding. Here's a weekly chart. So you see it's in a nice tight flag, and you know, real tight in here. This is a pocket pivot type move. It stalls though. But, you know, it's up there, and so you run into some selling up here, so it may need to go sideways, but this is acting fine. You really can't fault it. Salix Pharmaceuticals, another one I think, you know, has probably got more upside pulling back, but you had a couple of big moves, so I think this pullback becomes viable. You're using the low of this gap up as your stop, and, of course, that's 45.35, so you could even buy it here using 45.35, less than a point lower, less than, you know, 2-3%. As your stop. So, you know, you could try that. And I'm not, you know, averse to anything like that. And I will play the short side and the long side. Whereas the model right now stays neutral and it's in cash. But there are stocks you can play. Let's see. Questcore, you know, pulling down. The stock's had a big run too. It's getting a little bit obvious. But here, you're starting to get into an area where you're undercutting all the lows. You're holding this gap up low. So it should hold that low. So theoretically, you could buy Q-Core on this pullback using the low of this day at 37.60 as your stop. So, and I wouldn't be averse to looking at buying pullbacks in strong stocks. That's not how Dr. K likes to operate. But, you know, some of these pullbacks, you watch this market, and when things start to look ugly, that's usually when they bounce. And you just get this wiggly action. So some of these stronger stocks are pulling back to logical areas where you can implement a very tight stop. I think it's quite possible to pick it up. Somebody asking, could you explain pocket pivot? It's all over the book. It's all over the website. Don't really have time to explain pocket pivots.
Yeah, just go to the FAQ section and type in pocket pivots in the FAQ search bar, and that'll tell you all about them.
Yeah. Okay. So anyway, so you know that's what's looking good. You know, some of the stocks V. Oh, I need a daily chart here. Let me. I'm going to get rid of that. What are my daily charts? Oh, here we go. Here's V. You know, it's done well. It's pulling back and it's holding. MasterCard getting smacked around, you know, down to the 65-day. That's my black moving average, 65-day exponential, but down to the 50-day. You know, and you can see the action. It does trend higher, but now you've made a lower low in this pattern, and so, you know, maybe it's going to go sideways. Maybe it's going to blow apart. Who knows? But for the most part, you know, it just shows you that what acts well one day, the next day can start to get hit. And we saw that also in Panera Bread, you know, which reversed. You know, it's acting very well. It was acting well in here. It comes out. Big reversal day, trying to bounce. I don't know. I don't really care for this type of action. It did that. This big reversal occurred on Tuesday, which was a big up day in the market. So, you know, this is one example of the stock, despite the market being very strong on Tuesday, a lot of stocks were pretty weak on that day. So let's see. Oils have been acting well. You know, we like a couple of these seem to be good. Continental Resources, CXOs, Concho, that's one I've liked. They're acting okay, but you know, pocket pivot type action coming up through here. But it seems like stuff stocks have been doing better more recently than technology and the Nasdaq stocks. That's why the S&P has been leading. So you see Freeport coming up. You've seen some of the ags coming up, like CF, which we thought was a short before. Okay, that took a little while. Coming up. I don't know. Does this become shortable on this rally? Who knows? People ask about Apple. I think they're just pumping into Apple. Again, 11 times forward estimates. Think about this. Money managers, when I was at O'Neill, a lot of these guys, they'd tell me, well, a stock growing 30%, if I pay 10 times earnings for it, I'm not going to get fired. And when you get into a difficult market environment, that's kind of what they're all looking to do, to survive. And most of them are subject to oversight from boards, board of directors, whatever, for a mutual fund, whatever, and they get questioned, pension fund board, whatever, they get questioned about their picks, and so they have to CYA, cover their rear end, and so money goes into Apple when they have to be invested, I think, because at 11 times forward estimates, it's Apple. You're not going to get in trouble buying that. We'll see how this pans out, but again, you have a low volume move in the stock, but what I would note here is it just, no selling. That's really what you're seeing. And when it does come off, there's no real selling. I think it's really the picture right now with Apple is that the balance of supply and demand is in favor of the stock moving higher. So let's see. I'm going to go through some questions. There's a bunch here. And Dr. Hay, some of these are for you.
Shoot.
Okay. Would you call Zoll a pod? I don't know. Would you? Not really. Stop and think about this. I guess. Yeah. I don't know. It hasn't been a big, massive leader. It's kind of a funky stock, a little bit thinner, but that's a pod-like formation. Would I short it here? You have to kind of keep an eye on this, but not really a hot leader at this point. But to me, a pod occurs in a stock that was a hot leader, and I don't know if Zoll was really a really hot leader. It's been kind of a uneven stock over the years. I remember back in the early 90s, it was a big stock at Merrill Lynch and a lot of the brokers. When you're a broker and you start out, they want you to have your stock, and it's a stock that you go around and you've got research pieces with you in your briefcase when you go see people, and you pass them out, and you're building a position in certain stocks, and there are a bunch of brokers who were into Zoll back then at Merrill Lynch in Beverly Hills, and I remember they would sing the song, I'm a Zoll man, to the tune of I'm a Soul Man by the Blues Brothers, which I think was a cover tune. But anyways, but it could be called a pod as a shortable. You don't just start blindly shorting them. It's got to show some breakdown off the peak. So I'll keep an eye on it. Would you have sold Alexion? I don't know.
I mean, on this Zoll, because it had two gap ups in April and August, or rather July, and then it promptly had the equivalent of a gap down. Well, that is a gap down actually on August 8th.
Yeah.
That's not the kind of action I ever like to see. I mean, where you have that tells me there's a lot of news volatility in the stock, and so then recently it's had a gap up in November, and then what you could consider an equivalent of a gap up on December 15th. But after what it's done, I don't really trust the stock. I think there's better out there.
Yeah. Someone asked a question about INVN. Isn't it low price? And you know what? Go back and look at some of the pocket pivots and some big stocks when they get started. They a lot of times start in the $8, $9, $10, $11 area. I use a $10 minimum for stocks myself because most institutional investors, that is the minimum price that they can buy. So a lot of times when you see a stock emerging, it's above $10. That is positive for the stock. So it is thinner. So and it is smaller. We already talked about that, and that's why we talk about sizing your position properly in order to sit through a potential pullback at this point. But unless you bought it below 11, I wouldn't be touching it up here. I'd wait for something underneath 11 if that occurs. But it's like. Please don't interpret what we talk about as if we need to conform to Bill O'Neill's book. Because yes, we were trained by Bill O'Neill and we use the basic methodology, but we refined it a huge amount, and it's all based on statistical studies that Dr. K does, and it's very rigorous. And just the things that we find, for example, we don't use the S&P 500 to rely on follow-throughs. we use a NASDAQ because statistically it proves out. There aren't a lot of reliable studies on follow-through days. There's a lot of other factors that come into play. So there's, and as far as stocks, there's a lot of different ways we buy. We don't just buy breakouts like the rest of the herd. So I know everybody wants to put us in this little box. It's because we come from O'Neill. And there's some rule that you don't buy stocks under, I think Bill says under $8. So I don't understand what is wrong with this one, but some rule against smaller stocks, not always the case. And a lot of times, you go back, and I think if you look at some of the Solars, and you look at Crocs even way back when right after they came public, some of their first moves were pocket pivots coming out of these little IPO bases. So, Ulta was a pocket pivot with the gap. Well, I don't know about Ulta. It's on earnings. It's bouncing around on earnings, but that's not a pocket pivot because you're coming off the lows here. I don't know. How do you look at this, Dr. K?
Well, yeah, I saw this one yesterday, and you had a poor quality pocket pivot on the 4th because it's still trading under its 50-day and it's in the middle of a basing pattern. That doesn't make me feel comfortable in this kind of market environment. And then today you have this little mini gap here. Yeah, overall, I mean, I'm not real comfortable with this pattern, but I am watching the stock to see if it does something proper from this point on.
Yeah, but I mean, you can look at the daily chart, and this thing's just sloppy. It's all over the place. So you get a pocket pivot. Big deal. You had one here. I think it tells you that there are better things to play. Somebody asks, how do you decide to hold a short for just there to hold overnight? I flip a coin. How much buying power do you want to have the next day? A lot of times you can come in and cover at the end of the day and put them right back out. And that was possible this morning. You could have been short the last couple of days, CRM and Fossil, then covered them last night or taken them down to small positions, which is what I'll do, and then come back the next day and they bounce and you come after them again. But there's no method. If you're 400% long intraday, you got to get yourself down to at least below 200%. And I prefer overnight probably be closer to 100% or lower. Given the tendency of this market to gap up. Now, I actually was short a little bit coming on over the weekend, so with the big gap up, I was down a little bit, but I had a lot of buying power, and I just laid into some of these shorts like CRM, so it got real heavy, and of course they all reversed. So that's right. As a trader, you use mark-to-market accounting, hence no wash sales. That's right. That's actually what my accountant said to me. Thanks for that. Who was that said that? Henning, is that Tom Henning? January can be a tricky month. Gil, I doubt you traded any differently. You're always balls to the wall. However, Dr. K, do you trade any differently in January?
No, I trade. I let the stocks tell me what to do. I don't let seasonality really affect my trading. I mean, there's just too many instances where seasonality doesn't work, or at least it doesn't work in the way that will help you make money. It tends to be more of a distraction than anything. But if you look at the price volume action of stocks, of leading stocks, and also what the indices are telling you to do, that's much clearer an indicator, and it'll also keep your focus on what's important.
Yeah. Somebody's asking us our thoughts on BMW. I mean, thoughts. It's in a breakdown pattern. It bounces, pulls back. I don't know. I'm not really going to short this one here. Not a good position. I like picking on CRM better. Although, VMware tends to move with it because it reversed also on Tuesday. But what are my thoughts? I don't know. I'm not really doing anything with the stocks. I don't have any thoughts. How does Field's gap look for a pocket pivot? Field's in a deep base still, so that's not a pocket pivot because you're well below the 50-day moving average, and you're just kind of bouncing around, and you're in a downtrend, and really you haven't had enough time, I think, to set this up. You wouldn't be after this on the basis of, I guess, the action of 3 days ago, Dr. K. Would you buy that?
Yeah, it's a no man's land. It's you had a very strong downtrend. Now it's trying to make an attempt here, but it needs to really shape out its base before I'm going to get interested in the stock again. Yes, too much technical damage done.
Yeah.
I want to make a comment on that INVN about the price of it. I think it's more important to, in general, to look at the price, volume, to look at the market cap, first of all, of the stock. So, a stock can be priced at, say, $24, but have a market cap of 300 million, and I would, in this kind of environment, I'd stay away from that kind of stock altogether. Meanwhile, you can have a stock that's priced at $10, but have a market cap of closer to a billion, like in the case of INVN, and that's much more meaningful.
Yeah.
And I think Bill's cutoff was $12, and then he raised it up to 14. But that never made much sense to me because it's just the price. You should take the market cap together with the price. That's a more powerful indicator of whether the stock is truly a small cap that should be not played in a large cap environment.
Yeah. Somebody's asked about Jazz. We were talking about this yesterday. Is that a pocket pivot? Yeah, it is. But the earnings are slowing down, and it's trying to come around on a base. So far, it's working. But we're just a little cautious on it because of the fact that you have had a big run, and you could come after that pocket pivot if you really want to, I guess. But we just didn't think it was all that exciting just yet. So maybe a little bit premature. So we just want to kind of watch it. We like some of the other biotechs that are a little fresher, like Salix, the Cubis, the Alexion, I think coming out of the space looks better here. But, it's acting well, but it just tells you overall there's strength in the group. So I think I use it as information that the group is okay and the group is acting well, so that's where I want to be if I want to be long. Someone's asking about our new book. It's coming along. We're writing it. When was the last time Dr. K bought a stock long? Well, I think the last time we got a buy signal in the model, right?
Yeah, it's been a while. I mean, this this market has not been user friendly for most of 2011. I mean, certainly August was all about the short side and buying up inverse ETFs, and then there were a couple buy signals on the model in that mess. But because there was so much technical damage done, most of the leading stocks were not in viable positions after the market breakdown in August. So yeah, it's been a number of months since I took a nibble. I think I might have bought something. One of the PPR reports we sent out may have taken a small nibble on a stock on the long side.
Right.
But it was inconsequential. The trade didn't work, and I just closed it out.
Do you generally use market or limit orders when buying and selling? I mean, I usually just use market orders. Or really, sometimes it depends on the stock. I noticed with decimalization, you got these algorithms in there working orders for the most part. If you come in, let's say some stocks you can ding out 1,000 shares at a time, boom, 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 and it doesn't budge. That's a stock like, say, CRM is like that. But you start shorting stocks like smaller stocks or buying smaller stocks, and you'll notice that if you come in and hit 1,000 shares, boom, you're going to knock the bid out if you're selling or take out the offers. And then what happens is they form up again on top of the stock and they start to drop down. So let's say SLXP, if I came in to buy 10,000 shares, I'm just going to come in and boom, 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 start hitting it in 1,000 shares at a time to get to 10,000. It'll start pushing up. And I could demonstrate that to you right now if I wanted to, but I'm not going to. But so what I'll do is I'll actually drop the size that I'm hitting the offer at, maybe a couple hundred shares, just bing, 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 and be hitting it. Or I'll use a limit order on the offer with slight, 2 or 3 cents higher, and let it see if it fills in there. If it doesn't, then we sit there on the limit, let the offers form up again. So that's one way to approach it. But ultimately, it's not about whether you get 20 or 30 cents, better price on your fill. It's ultimately about buying a stock that starts out at price A and goes up to price 10A. Okay, that's really the issue. And so 1 or 2 points, 2, 3, 4, 5%, you're really kind of getting caught up in pointless minutia. And so, whether you use market order or limit order, I tend to use, if they're thinner, I might use a limit order. But if they're thick, it's like fire away, click, 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 click. So sometimes, I really get off going after something like an Oracle and doing 10,000 share blocks, anyways. Let's see. Any more questions? Somebody's asking about, okay, let's go to HL. Is it significant the 50 DMA is still above the 200? No. A lot of times, though, once the 50-day drops below the 200, that thing is probably ready to go. And you'll see that in a lot of these stocks where that will happen, okay? So, you can see here that Green Mountain broke before the 50-day cross below the 200-day. Now remember, for those of you who are new, blue is 50-day simple, red is 200-day simple, green is 20-day simple, and this little thin, wimpy pink one here is my 10-day moving average. The black one is a 65-day exponential, which I sometimes use on the short side. But it's neither here nor there. Stocks tend to move up into zones of resistance, and you kind of just got to watch how they act, and where they're running in. So in this case, you can see Green Mountain breaks down, but long before the 50-day drops below the 200-day. Now let's look at Netflix, for example, and you can see that it did the same thing. It broke down before that. But you can go back and let's see. Let's look at, say, I remember this one broke down, but see, same thing. It broke down long. So it's not necessarily clear, but what I notice is in the bigger stocks, it may take a longer time for that to occur. And I'm just trying to pick one out here. Let's see where that may have occurred. I mean, you can see Baidu. See, it's dropped the 50 days below the 200-day moving average, and then the stock started to break down here. So you saw more of a breakdown here after that occurred, but right now it's kind of holding in there. So it's neither here nor there. But I have noticed that once that does occur, that's telling the stock's getting pretty weak. So just as a reference point, I think it's useful that way, if nothing else. So Netflix, there's rumors that Yahoo's going to buy them. Okay. I think Netflix probably should buy Yahoo. Who's the bigger market cap, Dr. K? 4.32 billion for Netflix, and Yahoo's 19 billion. So I guess Yahoo could buy them.
Especially,
but,
Netflix took such a drubbing, so.
Yeah, I mean that's what's going on.
Looking like it might pass it up, but Yahoo's just been in a steady holding pattern since 2008. So it's always hovering right around 20 billion market cap.
Yeah, it gets the doggy award. Netflix, coming up through the 50-day, that's a pocket pivot type of move? Is it a bottom fishing pocket pivot? It could be. I guess if you have the anatomy to want to test that.
Yeah, I was going to say it's very risky because you have a number of gap downs in that pattern. So I would generally, a proper bottom fishing pocket pivot is one that's had enough time to round out the base and then move past the 200-day. This has not had enough time. I mean, it's just there's so much risk. I wouldn't touch it here at all.
So Dr. K, what about this one then?
Give it a few. I'd say general rule is if the stocks had an ability to either have a gap up because of something material in the company and then run into the 200-day afterwards, that's a better bet because a gap up is indicative that something material may have changed the company.
Yeah. And this is also well below the 200-day. So we'd rather see it. I'll show you what was a good one a long, long time ago, back in 2000, I think it was 2009. This is where you saw this kind of action, occurring Intuitive Surgical. Now, this one actually worked pretty well. See, but it really, once it got above the 200-day, it's a little bit better, and you could be buying probably here on these pocket pivots in here as it's coming up, and then it gaps out on earnings. But I remember the old institutional guys at O'Neill when I was there. They had a general rule that, and the institutional investors loved this. And it was that when you had a big leading stock, the first time you see a big volume move above the 200-day, you can start buying it. And the institutional investors, they're the ones who create the bottoms of bases, and they love that. So the old guys there used to use it. Now, I find that tends to hold for pocket pivots as well, because you can see that Google back, where was it? Somewhere back in here, I think it was. A little bit too far. I think this is a weekly chart, yeah. So I think Google in here, yeah, see, there's where it does it there, there's where it does it here. So, and you notice it tends to continue moving higher. So institutions really like that. So a lot of times you'll see the pocket pivots occur there as well, and we've seen those with stocks like Google, with iSearch, I think. I even think Priceline did something like that back here. So, and you had some pocket pivots, and then it took off. But you can see how there's some pretty good volume there. Well, it wasn't huge, but I think you had pocket pivots in here. In fact, if you look at the daily chart on Priceline, going back to, was that last summer, Dr. K? Well, yeah, in here.
Yeah.
So here's a pocket pivot. You see it's going above the 200-day. So, anyways, somebody keeps asking about
ICRG in I think it was April, where it had April 2009. that big drop that it had is, of course, contextual of the market. The market also had a big drop. So, in other words, it's not like this stock is all of a sudden cancerous and shouldn't be touched. It's in context with what the market had done prior.
Right.
And also, you'll notice that there was a number of months that it had a chance to round out its base. In other words, the descent, the rate of descent slowed considerably after November. So, and then it got real tight in there in March. So that was a good platform to buy as it sprung through really on the 9th when it had that pocket pivot. That was a good buy point.
Yeah.
9th of April.
Somebody asking about throwing them a cookie so they can self-populate. The what? Any chance of tossing a cookie my way to make the registration form self-populate? No. What am I? Go to webinar tech support? Just fill it out. It's enough that they can create technology that allows you to do this sort of thing online to a large group of people. But it's always amazing. Everybody always wants more, so they want the thing to populate the thing. No, we have new subscribers coming on all the time, so we're not going to have something that can self-populate for somebody, because if they cancel, then they might do something for them, or it just creates issues for us, and we don't have any technology that allows us to provide a cookie. Go to webinar, go talk to them. If they have something that allows you to do that, that doesn't infringe on the exclusivity of the webinar, then we don't have a problem with that, but we don't have anything, and we don't have access.
So they're kind of like, how Facebook is developing very, very quickly, and a lot of Facebook is, at the edge of Facebook, it's in beta, and same with GoToWebinar, and I'm sure something like that, I mean, I would actually write the company and just say, look, that'd be very useful. Would you program it into your code? And I'm sure they get other requests like that, so I'm sure it's probably on their list of things to do.
Yeah. So that's their bailiwick. We don't have any cookies or any special programming or anything. It's just me, Dr. K, our trader Bill Griffith, and now Ross, and we run the company. So until we get really big and buy some office building somewhere and hire 100 people, that's kind of how it's going to be. Anyways,
maybe that 100 will be located, will be geographically diffuse.
So all that is to say, sorry, no cookies, no cookie for you. Let's see. Somebody's talking about still thinking Feb timing. We're going to have more webinars on the managed accounts. We're just getting a new broker for that, and I'm not going to really waste time in this venue talking about it. CMO continues to act well. Silicon Motion, maybe these smaller chip stocks like INVN2 is going to do something, but I don't know. I'm not really a buyer of the stock. It acts okay, but it's a much thinner stock. Trades a little over 700,000 shares a day, and it's trading at 21, 22 bucks. Too thin for me. So, let's see. Any other questions? I don't know. I think we still got metals. What do we think of metals? Metals. Throw me some names. Like what? I'm not buying metals. So, are you buying metals, Dr. K?
Not yet.
So, what metals you like? You like X? Is that what you're talking about? I don't know. A low, it's in a low base. FCX, that's a metal, right? And another low base coming up. Not really something we're looking at yet. So, but you notice these stocks have been doing well. I mean, you look at, just go to finviz.com. You can see over the last week. I think it's industrial materials, basic materials, conglomerates, those sort of things have been leading the market, and that includes things like oils, that includes things like metals. They've been doing well. So, on that basis, I think they're coming around, but that's just where money's flowing into stocks that are coming up off the bottom. So, right now I think a lot of managers are faced with the problem of if this, you have the media talking about the fact that the first 2 days have been so good. The first day, as the first day of January goes, so goes January, and so goes the year. BS. That's what I say. Maybe it does, maybe it doesn't. But I think a lot of money managers might, on that simple-minded logic, might think that they're behind the 8 ball here and they need to move into stocks. And so they'll come after things that are cheap, but I think the stocks might have an appeal too, because I still think you have some systemic risks out there that you need to be paying attention to in terms of what's going on in Europe. I don't think you're really out of the woods. And the fact that the Europeans came out and announced a program where we're going to loan 489.2 trillion euros to 523 banks. and you didn't see the markets really rocket or anything. I think it tells you that the QE may not be enough right now, and we think that the Fed is sitting on their haunches because they don't want to use up their ammo too quickly, and they might be more inclined to come in and use their potential for more QE perhaps in the springtime, when they may start to get more bang for their buck, so to speak, because they'll get more traction with better economic policies in place, perhaps coming in after a new administration and new Congress comes in after January 23rd. And that may be what the Fed is waiting for, and maybe they get more traction. I mean, the position of the markets now, you're way above the lows, which I think is like 2050 on the NASDAQ and 10 something on the S&P. You're way above the lows of last summer. And when you look at the market in those terms, and we'll just look at the NASDAQ without the volume here, but let's just look at a NASDAQ on a weekly. You know, here's the lows of last summer, okay, and here's where you're at here. So, you know, you're in a position, they can let the market correct and then come in at some point and come and save the day with a bunch of QE, another round of huge QE, and I think that would be where you would see gold start to bottom and probably turn before the market does. And I would watch for that because that's what happened in 2008, in the latter part of 2008, when the market came down. Gold started to break here in August. And you notice the market didn't bottom until March, sorry. And you look at gold, and gold came down started to break down, you know, in August, and it actually bottomed way before the market. If the market bottomed here in March of 2009, gold bottomed here and started up. So that's kind of what we're watching for right now, and that's what we think may happen. Outside of that, you know, if we get a valid buy signal with the model, we'll probably go with it, but probably in measured fashion as we did last year. We can tell you this, we're not allowed to provide information about any fund we might run for accredited investors because the information can only be provided to accredited investors. I know we had a little snafu the other day, and I got to tell you, it's just comical what something like that goes out and it has the blanks for the performance numbers, and we don't even have any real performance numbers anyways yet generated by any of the accounts for any accounts that we maintain performance records for. So it's not like we put anything out, but it's funny how people try to make something out of it. I think it just tells you most people don't have enough to do. And I also think it's why things like reality TV and the Kardashians can become popular, you know, if you think about it. People just get into that stuff or try to make stuff out of nothing. But in any case, you can tell you this much. Dr. K and I run our retirement accounts together, and we use the market direction model exclusively in those accounts. And we finished up somewhere around 30% for the year. We'll be on either side of that number. And that's not too bad. We were at one point down over 10% and at one point up around 50%. So that shows you some of the volatility, but we stuck with the model all year long and it worked. And in a year, that was very difficult. And I don't think there are many money managers that were up for the year. So that's really the bottom line. You know, but 2011's over. All I know is I'm up 11% to start out 2012, and I'm annualizing at a little over 3,000% a year right now. How's that, Dr. K? Wow, you want to send an email out on that, and we can crow about that one. So the thing is, in 2 more days I'll be down 20%, but that's beside the point. In any case, I think that pretty much covers everything right now. Any last questions, anybody? Okay, well, this will be up recorded, and it'll be up. I'm watching these stocks. You know, I'm kind of. We've been sitting here. I've been pinging Lulu on the short side on this rally. I may be all wet here, but it's coming in a little bit off the peak. It got over 20, got over 52. Let's see, Fossil, same thing. You know, it can't get up to 80. It's 79.10 right now. I'm kind of faltering, but we'll see where this market ends. You know, if I got to cover and blow out of my shorts and take small loss today, I'm okay with that because it's a good start, and we'll just see where this market goes. But it still is difficult. You can play it both ways. You know, some of the stocks we're looking at, but it's not the type of environment where you can operate with sure footing. It's a little bit slippery out there, and so be aware of that and decide, you know, the kind of risk you can tolerate. And I'll go, you know, shorting the market like a madman, but I'll be pretty quick in pulling the trigger and bailing out. The beauty right now is I've got a cushion to start the year off, so we'll see what happens. But I'll keep you guys apprised of what's going on with the ideas we have on the short side and what we should be doing. I think right now you just got CRM. In fact, you know what? I don't even have CRM up here. Let's put it up here. You know, it's trying to bounce, but I'd look at it coming up into the 10-day right at, say, 99 to 100. Maybe it bounces that high, maybe not that high. If you're short from the other day, you can probably try and sit. I played a very heavy position, made very good profits very quickly, so I kind of covered once it starts to reverse. But I may always go back after it, and I may go back after it a point lower from here. So again, we're not interested in 1 or 2 or 3 points. We're trying to get bigger moves on the downside, and that's kind of what we're playing for. Okay, and I think that's about it. And Dr. K, you got anything to add?
No, I think let's just see how this how this year turns unravels here, depending on this trendlessness that just keeps at us.
Yeah, and I would say, you got to be alert. You got to be paying attention to what's going on because, yeah, we had a trendless housing market last year. We were able to be up pretty nicely, so we're happy there. But we think if we could handle that kind of market that way last year, and let's say 2012 is a little bit better defined in terms of what kind of trends develop, I think we do a lot better this year. So, anyways, persistence is definitely required if you're going to be an investor. And those of you who are wimpy, give it to someone else to manage. That's all I have to say. All right, that's all I've got, you guys. Thanks for showing up, and we'll catch you next time. Take care. Bye-bye.
Take care. So long.